Hey everybody, welcome to Mortgage Today for Monday, April 29th, 2024, and oh, what a day it was. UMBS were up 9 basis points on the open, at least it's in the green. S&P futures were up 12.75 points. Stocks were buoyed by earnings optimism as traders looked ahead to a busy week of company results. The yen rebounded after dropping to its lowest price in 34 years. With Apple and Amazon scheduled to report in the next few days, investors will be hoping for some evidence that big technology profits can keep propelling stocks. S&P 500 futures added 0.3 on Monday. Tesla Inc. jumped 8% in pre-market trading after clearing hurdles to introduce its driver assistance system in China. Markets don't expect the Fed to make any changes to the Fed funds rate. However, the language of the press release will be critical, especially if it refers to risks to the upside on inflation, which would open the door for future rate hikes. Aside from the Fed meeting, we'll get a lot of important economic data with house prices on Tuesday, ISM jobs data, and aside from the Fed meeting, we will get a lot of important economic data with house prices on Tuesday, ISM data, and jobs report on Friday, as well as ADP on Wednesday. The problem of high house prices is a knotty one, which was driven by bad economic and monetary policy. We printed a lot of money following the typical Great Depression, Great Recession playbook. The money went into real estate speculation. Now some politicians are trying to pin the blame elsewhere, blaming professional real estate investors. They want to force investors to sell their portfolio to families. They blame the BlackRocks of the world for driving up house prices. The thing is, the vast majority of rental properties are owned by people with 1 to 9 properties. Considering the volatility may lay ahead, Monday ended up being calm and decent start to the week. The ostensible overnight headwind was the rumored currency intervention by the Japanese government. In the past, this has caused heavy selling in treasuries, but that wasn't the case. As such, this wasn't really a headwind. The more legitimate challenge came in the form of higher borrowing estimates from the Treasury this afternoon. Bonds actually did a good job of taking the news in stride, but nonetheless moved to weaker levels. It was a bigger problem for MBS due to the way they relate to the Treasury yield curve these days. The resilience in spite of increased Treasury borrowing was a welcome sight on Monday, but it doesn't change the highly data-dependent nature of the week. On that note, Wednesday is when things ramp up, higher risk, higher reward beginning on Tuesday afternoon. UMBS closed the day up 7 basis points at 99.44. So at 99.44, we're still pretty well underneath this Fibonacci line at 99.647, which has been a pretty tough ceiling going back a couple of weeks ever since we dipped below it. So hopefully we can get some bad news to get us above that.